it off, let me now bring on board Jake Kumar, represents Prime Securities. Jakes, welcome back. Always good to have you back on ET now.
Thank you.
Jakes, we've put a very important news-heavy week behind us. Budget is over, credit policy has been announced, eco survey has been tabled. What to your mind could be the next big trigger for our markets now?
I think the triggers always have been and continue to be fundamentals. I think what's dominated at least our markets in recent times has been this entire problem of government policy paralysis in the context of interest rates that haven't come down, in the context of tightening liquidity domestically. What's really hit matters is that the markets have been completely and totally oversold into the last quarter of last year. So the bounce that happened came off extremely oversold conditions. So, if we moved from 4,800, 45, 4,900, which was the range then, and we sort of moved straight to the 52, 5,600 range, that's a function of extremely high overseas liquidity. And I think that will continue to be the dominant theme as far as our markets are concerned over the next, I would say at least the next few weeks, if not the next couple of quarters, which is high overseas liquidity. And if that can, in a sense, be dovetailed by a fair amount of should I say surprises, because nothing, as in nothing, is factored in vis-a-vis what the government will or can do. And I think if you had any positive surprise here in terms of one policy action, couple of divestments to go along with it, I think you'll have, and the budget as always has been a non-event. Has it done anything to warrant a market re-rating? No. Has it done anything to warrant a market de-rating? I think the answer there also is no. So really speaking, I think the budget has just come and gone. We've had very little to do with determined steps being announced, and so anything that happens now may well reflect, I would say, the will of the Congress party, but in the backdrop of very, very strong inability to do so given coalition politics.
Jakes, so far this year, Indian markets have managed to climb the wall of worries. Do you think this phenomenon is here to stay? Even though fundamental turf, Jakes, is not all that strong, but liquidity is taking care of all the concerns?
I think it's probably addressing a truism that when things are oversold as the way they are, then inevitably somewhere along the line, money like water will find its own level and it will sort of come in to take advantage of, and this is what has happened. So I think we've moved away from that oversold position. We've moved to now a fair value stock-specific situation, which has always been the case, and the move typically is fast and furious, and that's really the sort of Vin Diesel motto, as it were, that it is quick and it is almost there with complete disbelief and skepticism. As we see right now, I think there are enough and more stories that will feed off this slightly weakening rupee scenario, which of course is weaker compared to 6 months ago, but has pulled off from its lows of 54 down to about 50 quarter levels. So I think with the rupee being slightly weak, I think export-oriented industries which we've been fancying will continue to do okay. We think that a lot of individual spaces are now looking a lot more attractive. We think, for instance, if metals were extremely hot, then users of metals, because metals have cooled off a bit, will be beneficial now. For instance, the pipe space, we like that a lot, whether it's Jindal Saw, which we and our clients own, or it's Wellcorp, which we like a lot, and given whatever other corporate news that has happened in Welspun, etc., we think overall this space specifically becomes a big re-rating. So Jindal Saw, Wellcorp, and the pipe space principally because the margins are back in their business, orders are back, and over a period of time, it's as essential as it gets. Big demand surge coming in from the Middle East, coming in from the US, etc. So this is one space we like. Second space that we've liked, as I said, has continued to be things like textiles, continue to be things like shipyards. Those are individual pockets that we like. Heavy engineering space, we like things like in the domestic consumption story, we think that the markets have moved up pretty dramatically. Valuations are rich. So we'd rather, in a sense, go in for maybe the infrastructure space. Maybe we can go in a little bit, on the engineering goods space. So those are the areas that we kind of look at. So there are individual pockets. The power space looks very good. We're very bullish on stocks like Lanco. We're very, very bullish on stocks like GVK Power. So those are the spaces that we kind of track. And I think in markets like this, you need to have a little bit of that of the thesis which says that if enterprise value is largely a function of the debt in the company, as interest rates come off, which we think is inevitable in come April, as interest rates come off, as liquidity even domestically improves. As you know, the last CRR cut only brought in money which took care of the immediate needs of the advance tax payments of corporates. But come April, that money will come back into the system, and then we'll see it. March is typically a lackluster month because of local liquidity issues. And as that gets cleaned out, we think liquidity will return to the markets in April, and wouldn't surprise us at all to see an April to September period where markets react positively to any small, however small, surprises that there might be on the government front, and more importantly on improving corporate fundamentals as interest rates come off and as liquidity improves.
So, Jakes, when do you think the central bank will actually begin to cut interest rates? Because that again is the trigger that may cheer markets. Or do you think it is going to be difficult for them, considering crude is still sticky and the government borrowing is still high?
We believe that crude will come off pretty soon. If the last time around crude hit 140, this time with as much liquidity in the system, but with potential dislocation in the Middle East, it's only gone up to 125 levels. And the WTI, for instance, has only gone up to 107, 108 levels. We think that maybe crude is ready for a correction. A lot of speculative money has gone in internationally into that. And we think that crude will come off for a long-term sustainable range of, say, 90 to 110, rather than this range of, let's say, 110 to 125, which it is currently, or a little higher also. So I think if crude comes off and the rupee stabilizes around 50, there may be some demand destruction in various parts of the world. But that apart, my own conviction is that we will, as India as a country, muddle through it. But the reduction of interest rates, actually there is no option but to allow that. Or there's going to be plentiful amount of money that's going to walk in, simply because the environment here allows for positive returns in a zero interest rate scenario world over.
Jakes, what are your thoughts on real estate? A bad business, good value, or bad business, bad value?
You know, everything is a function of the price at which it's trading, and I think real estate's come off quite dramatically. Most of these stocks are quoting very close to their, what's the equivalent of book, if you will. And the same real estate 3 months ago, there was no offtake, nothing was happening. To a large extent, that's changed. There's, property is changing hands, things happening, and at least in metros, at least in Bombay and South Delhi, if you will, excuse me, and in places like Gurgaon, there's a fair amount of activity that's happening, which actually has allowed for, if you will, a lot of these companies to monetize some of their assets. And I think that will be the continuing theme. So as companies like DLF and Unitech, etc., continue to monetize their land banks and keep reducing debt, which is their stated objective, I think you will have a scenario where some of these will, regardless of the external environment, continue to find a base at current levels, or give or take 5-7%, and could surprise on the upside as liquidity and interest rates ease off in April, May.
So, Jakes, going by that logic, would banks be a good bet to put money in?
Banks are, if you will, the first space that get affected by interest rates. People are the valuations are indicating to me, as also the bond yields, that somewhere along the line the markets are sensing a cut in interest rates. And clearly, while that might be a forced cut in interest rates, but it will need to have an impact that brings in further rate cuts. I think we are far aggressively placed in terms of interest rates right now, which is only hurting growth. And somewhere along the line, even against their wishes, in a manner of speaking, the RBI will have to cut rates. And banks, therefore, will have already sort of bounced off their lows pretty aggressively, indicating further rate cuts. And I think the way the stocks are poised, my own sense is that the downside is limited. But there could be upsides evolving even from here, where private sector banks, given their lower propensity to have NPAs, will actually be beneficially, much bigger beneficiaries like Yes Bank, etc., far bigger, beneficiaries than the public sector banks.
Jix, over the years I've known you, you've always been a contra investor, and insiders are telling me that your big contra idea for this year is Pantaloon Retail. Why do you like Pantaloon Retail? Look at the debt.
I think, this goes along with the existing theme that, frankly, the prices, in the market indicate nothing will happen in Pantaloon in a hurry. Is indicating complete skepticism. And my own sense is that, over a period of time, if there's one thing that Pantaloon's created, it's I feel, a tremendous set of properties which probably need to get harnessed in the context of more capital. My own, 20,000 foot view, if you will, is that the SP in some form or the other will continue to support the Congress. A lot of things which people are not expecting will go through, and I personally think FDI and retail in some form or shape will come in. And there are enough avenues in any case for Pantaloon to start divesting. I mean, today, at the end of the day, you see real business being transacted in Pantaloon. Yes, there's been an issue on the debt, and there's been an issue on the fact that whether this can be serviced. But most of the debt, from what I understand, is maturing, a year out at the earliest to the next 3-4 years. And my own sense is that a year is a long time in business, and between now and the next year, a whole bunch of divestments will take place. And value unlocking, to my mind, will happen at every stage. So really speaking, I see Pantaloon with a maximum downside of maybe 10-12% from here, and an upside that could really surprise everyone. So this is a big contra call that we have. And while on the subject, I would like to say that whether it's Pantaloon or any of the others, Prime and our clients have positions in these and have a vested interest in these, and therefore it should be seen in that context.
So, Jix, as a theme, broadly, you like businesses where the balance sheet issues are there, but those companies, to your mind, are capable of servicing those balance sheets, whether it's Lanco, Pantaloon, or GVK or GMR.
Well, absolutely. And in fact, in a declining interest rate scenario, as debt gets paid off, three things happen. If their market cap is, if their enterprise value, which is debt plus equity value, market cap that is, has a disproportionate share of debt as a percentage of enterprise value, then as debt gets paid off, so for instance, let's say Pantaloon, for argument's sake, has a 3,000 crore equity value, which is market cap, and it's got, let's say, 8,000 crores of debt. Just give a broad number. And the 8,000 crores of debt comes off by even 2,000 crores or 3,000 crores in the next 12-18 months as a result of non-core divestments in the next 12 months. You're talking about 3,000 of equity value becoming 6,000 crores simply because debt to that extent came off. That's true for Lanco, that's true for GVK, that's true for a whole bunch of other things which, have a high percentage of the enterprise value constituted by debt. And in a scenario where, as I said, interest rates are expected to come off, liquidity is expected to ease, including foreign liquidity, by the way, allowed in some of these spaces like power space, for instance, I think it could have a very, very big impact on the overall equity value of these companies.
I just want to bring up that point that you were making about Pantaloon. You like the stock irrespective of FDI or no FDI. However, on the policy front, how easy is it going to be with the government and especially the political drama that we saw after the railway budget to actually push through the reforms?
I am not a political pundit. All I feel is that most political parties, other than, when the Congress raises it actually, have been not opposed to, FDI and retail in a manner of speaking. It's been given far more importance than it need to have been in terms of a fundamental, should I say, policy announcement. This needn't have gone through Parliament. There may have been reasons why the Congress raised it in December. But the reality, it's not so much to do with the government. There are enough properties that Pantaloon has, which are non-core, which can actually be spun off or where permitted investments can be brought in. A whole bunch of these have been enumerated. So from that perspective, I think even whether FDI and retail in its multi-brand form happens or not, I think there could be different investors that could come into this space, and that is something that we kind of feel is a possibility. In fact, it's a real possibility that money will come into those spaces, in a sense deleveraging the balance sheet. But the other point I want to talk about liquidity is that March has been always a nemesis of Indian stock markets, and local liquidity has been, exceptionally squeezed. And at times like this, my own sort of sense is that locals have been selling, local retail investors have been clearing out their books before March 31. So sometime in the next few days, I think that phenomena will stop, and come first week April, I expect not just liquidity to re-enter the system through advance tax monies coming back into this system, but also a lot of retail investors, private financiers, etc. coming back. So April may be, all things remaining the same, may be vastly different compared to what March is showing, where positions, open interest, etc. are gradually coming off, and there is a fair amount of, should I say, kind of tepidness, if you will, about stock price behavior. And I think a lot of this could change come April. That's why I feel the April, September, that 2-quarter period could be a very strong period for the markets.
So, Jakes, let me just summarize this interview and correct me if my interpretation is wrong. Your market call is that directionally we are headed higher. As a concept, as a theme, you like asset owners, and as a stock idea, you're bullish on Pantaloon retail.
Well, I mean, amongst the various things, I think that's a fair summary of what we discussed.
Where are you investing personally?
In all of these, actually. I mean, these are all investments that we have, and I said that we've talked about disclosure. So the idea here is not so much, as I said, that you expect something happening overnight, but directionally, I think you need to be where the tailwinds are giving you a much higher, risk return, return risk profile, and I think the returns here are far higher than the risks associated.
Between Langford and Pantaloon, which is a better bet?
It's not one or the other, but I think both of them have a whole bunch of corporate action events lined out, which they have talked about. Whether it's private equity coming into one or the other, and I think both will give decent returns in the coming few months.
You're not a political pundit, but you track cricket. Who's winning Asia Cup?
Good question.
You're thinking which means
I think for starters, if Lanka goes through, then we could have a pretty exciting final. I think the controversy is already there with Syed Ajmal's action being questioned today. So I think we're gearing ourselves for the final, and I think India should get there. Lanka won't lose 3 in a row.